Hey everyone, welcome to another episode of Stand on Your Business with your host Nina Gonzalez and
I am Natasha Robinson, and today we are going to talk about, guys, today we have to talk about what we're hearing in the news with the Navy Federal discriminating on African Americans for purchasing a home,
uh-oh.
denying over 50% of people that were approved for a conventional loan. So sometimes we don't get right into it this fast, but today we need to get right into it.
We do. Okay, that's a little controversial. That topic is like it's a lot to dive into, but we gonna stand on our business. Like basically it is what it is. We gotta do and say what we gonna do, right? So Natasha, you brought up this topic, so I want you to just give me a little sprinkle.
Woo! So from what I hear, CNN has reported that Navy Federal has denied over 50% of African American buyers. And then they talk to the buyer in the video that I saw, and they say at the end that it was discriminatory. So it has really affected me because I have to deny a lot of my own buyers. 95% of applications sometime are of some type of minority that we work with. And the reason why we kind of came up with the podcast is because it was so busy and it was so many people not standing on their business, including myself, including my clients, that I thought, hey, we need to come up with this podcast so that way we can teach them that. So the Navy Federal news, is driving me crazy because if Navy Federal is discriminating because they denied 50% of buyers, I'm a minority. I'm not being discriminatory when I deny buyers. So we just need to talk about like the pros and cons of the article and how we can stand on our business and gain a little something from it positively, so that way we can help our buyers get to the next level.
You shared some information with me a little earlier, right? That we had about how many applicants?
So normally, this is not normal. So I normally take about 178 applications in the busy day. Now, we know times are different. Things have slowed down. And of that, I'm able to issue a pre-approval for 35% of the applications that come into me.
But that's at the pre-approval stage.
That's at the pre-approval stage. Generally, my pre-approvals, I'm able to convert because we do full underwriting. We make sure that they qualify. But I don't convert 100% of the 35% because some people never find homes. Some people may have found a different program that may have came out from another lender, or some people may have just decided that they don't want to buy right now.
Yeah.
So we do have, I haven't measured the percentage of how much I convert from actual pre-approvals, but other lenders do convert more of their pre-approvals.
Well, let's get back to the metrics. You told me, and we shared that you had about 75 applicants, and of those you were only able to pre-approve 6%.
I was only able to approve about 8 of those buyers within the past 45 days. I don't know what's going on in the world, but I had between 60 and 70 people apply, and we were only able to get 6 pre-approvals out. Now, of those buyers, some people would never give us their social security number, so we didn't get to fully pre-approve them. 40% of them had a credit score between 400 and 570 or 580. And then the others, I had a high percentage of people who wanted to be investors that already owned homes but had very low credit scores and then did not have the 25% to put down as an investor would need to get to the finish line. So those
But I think the
metrics.
difference, because you said, oh my God, do I discriminate?
Right. I was like, Navy Federal, my pipeline, like, how can we compare to make sure? And I'm hands-on on my files so we can see kind of what's going out, what's going in. I do have a large team. So whenever we have someone that is denied, I do go back and look at it to see what was it and what could we have done better for that client, or can we get them pre-approved?
Can we get them pre-approved? But the difference between you're doing all of this work at pre-approval. So that's why you're able to discover all of these changes. What's happening at Navy Federal, these are people who already go under contract. So they're not doing that extra screening. They're not doing that extra legwork. And that's why the Navy Federal numbers, in my opinion, that's why they're so daunting.
Yeah, and I don't think it's that when they go under contract. I think that people do not know the difference between, I call it a pre-approval and a pre-approval. right? So our systems are set up where we can just automatically get a pre-approval issued. So if you are a client and you have, and I said this on the episode, but I have to on another episode, but I have to say it again. If you have a 720 credit score and you work a job, right? And you make money from your job, but then you have a side business and you make $4,000 a month from your side business, but you don't report it to the IRS. In addition to that, you take care of Auntie Sharon and you get another check for $15 an hour, 20 hours a week, because I know it's a lot of people that do that.
Yes.
And then you're also not claiming that on your tax returns. Then you have a 403B with $150,000 in it, but you can't withdraw from it until you turn 56 and you're only
retire.
35.
Right.
So now you've entered false information into the system.
Well,
So,
I don't want to say false.
well, not well,
Let's
you're
say
right.
false. Let's say mistaken.
Mistaken, because it's your income. You just don't understand how it is calculated.
Okay. So back to what you were saying, let's make it clear that you don't deny all of your borrowers. We were just in a weird time.
Yeah, no, we want to get everyone that we can get approved.
We were just in a weird time. I have experienced a low pre-approval conversion as well, but it's because of, I guess, the type of buyers during this time that want to get mortgage ready. But we specifically are bringing up the Navy Federal situation only because, in my opinion, a lot of the discovery work is being done when people are already under contract. They've already paid for an appraisal that runs between $400 to $800. They've paid for a home inspection that's about $300 to $600. They've paid for their earnest money that can be from $1,000 to 1% of the purchase price. So you have these vested people who they're already looking at their closing date.
That's because they do business with Bank XYZ, because they are there checking in their savings and not with their loan officer that's licensed and experienced on deal structuring. And it is a difference be going to your big banks who work 9 to 5 and get a salary than going to your loan officer who only gets paid off commission if a file closes. So there is a different fiduciary responsibility, as I like to say, right? In a loan officer that works off commission only, because we're not going to make money if that deal doesn't close. So I just feel like we work harder. Now, I do meet some people at the banks that do go above and beyond that are friends of mine that I actually refer deals that don't fit in our scope of work, that may have a portfolio product that's available to my client. However, it's not that many people that actually work as hard as we do. So as it relates to saying that guys don't, they give us incorrect information. The information isn't incorrect, but it's not the information that we can use and verify for a loan. So thank you for that. So you input information based on what you're bringing in, but we can only use the information based off what you're paying taxes on. So if you have this said business and you're making $10,000 a month, which happened on a good 20 of my files, but you only tell the government that you made $3,000 a month, then I can only use
what you're
$3,000 a month.
What you're telling the government, because that's what can be documented. Now, this is specifically on traditional type of mortgage financing, right? There are other programs. We're not talking about the other programs. So before you get in the comments talking about use a bank statement loan, use a DSCR loan, we're not talking about those.
We're talking about the loans that Navy Federal denied. Right. They denied conventional loans,
financing.
Not VA, not FHA. The article says that they denied conventional loans.
And back to VA, you do not have to go to Navy Federal. You do not have to go to Navy Federal to get a VA loan.
Many people think in Veterans United,
you do not have to go to them to get a VA loan.
You still need a deal structure. Now, you can compare rates, and that's something that we don't do in our community a lot. We don't compare. We'll find a lender that we trust and we stay with that just one lender. It's okay for you to shop around and compare interest rates. So if Veteran United Fidelity, whatever their name is, but they put the VA in their name to make you think
that they're exclusive
to VA, but they're not. That is marketing.
That is marketing. Oh my gosh. Thank you for bringing that up. The same thing with Navy Federal. It's like just because you're in the military doesn't mean that you have to go to use them to do your financing. I myself have a Navy Federal account. Are they the first ones that I'm going to go to get a mortgage from? No.
How you get that account, girl? Not just mess with you.
I have a family member. But going back to deal structuring, let's dive in a little bit to that, because I totally forgot about this. Spoke to a buyer last week, Thursday. She's comparing my situation, how I vetted her, with the person she spoke to at Navy Federal. What I became to discover through this call and doing the 1, 2, 3, 4 extra questions, you dive deep. The person she was dealing with is more like a call center loan officer.
Yeah, that's exactly what happened. So I bank with Navy Federal as well. And
It's like
I
a
call
call
for a
center.
mortgage, and you talk to the person that answers the phone. Then
Yeah.
they take your application, and then they'll call you back.
So what happened with her in particular, she gave the potential client the idea that she was going to be working on her file, and then she came back with a lot of change of information, and it made my potential buyer, feel uncomfortable because she did what buyers are supposed to do. She compared. She's looking out to see who has her best interests, best terms, best rates. And she still came back to talk to me and say, I didn't feel comfortable because it felt like she didn't know what she was talking about. Every time she had to put me on hold, everything was, I will call you back. Everything was a pause. Everything, she always had to go back. And I'm not opposed to that. So if you don't know the right answer, it's okay to say, I will get back to you on it. Just don't tell a lie.
Right. Tell the truth, the
Tell
whole
the
truth, and
nothing
everything the
but
client
truth.
qualifies
So
for.
the client was like, I was not as confident with her. I've spoken to you, and you know what you're doing, and you know what you're talking about. So even though they gave me a lower rate, or they quoted a lower rate, I'm not going to work with them anymore because I couldn't even get a clear answer on what a proposed mortgage payment would be.
Got you. And the thing with, and we're not here to like bash Navy Federal. Like some of my clients go to Navy Federal, they close fast and they have no problems, with the process or whatever.
Client. That's not every client.
But I want to talk about pre-approval versus, because some clients will get approved no matter what. Some clients have high income, they have high credit score, and they have a lot of assets. And no matter what bank they go to, they're going to get pre-approved no matter what. The problem is understanding the difference between a loan commitment and a pre-approval. And a pre-approval, you can go in the system and state your income and state your assets and state everything about yourself, but then get a pre-approval. Well, if you are allowed to work with a lender that will do that, so if you're going to work with whatever bank, yes, make sure, ask them, did you verify my income? Did you verify my assets? Ooh. Did you do a fully underwritten file? And if they didn't, do not be mad if you get denied 2 weeks into your purchase contract. It is your fiduciary responsibility for you to stand on your business and for you to make sure that your file is fully underwritten. And I'm telling you it today. So if you go to Nina and she says it's going to take an extra 2 days because you got 6 jobs, we got to verify 6 employment, and she got to wait a day to get your pre-approval out, but XYZ Bank is going to give you the pre-approval right now, understand they didn't wait on 6 employers. So when a problem opposes and comes up, understand that there can be a problem because they didn't do their due diligence.
All right. So if you're taking notes, if you weren't taking notes, now it's time to take notes. Pull out your pencil and your paper. She said, make sure that you ask, was my income verified? Were my assets verified? Did you fully submit? Do I meet all the requirements for the program?
Did you check the underwriting reports to make sure I'm clear? Did you make sure I didn't have unacceptable large deposits? You cannot get a loan to get a loan. So if you have a deposit for $40,000 because you answered one of those checks that came in the mail and you deposited that money and it wasn't on a secured property, you cannot use that $40,000 to buy a house.
We're going to backtrack, and I don't want to put none of my people on blast, so I'm never going to use names. But I had one of my beloved clients say, yeah, I'm using my credit card for the down payment, not in traditional financing. You can use that for your investments. You can use that for your what was it, that wholesaling? Mm-hmm. You can use that kind of stuff to do that. But on your traditional kind of financing, you cannot get a loan to get a loan, right? So you cannot pull 13 grand out of your Chase credit card and use that towards your down payment. It is not allowable on traditional type of financing. And that's what we're really targeting, is conventional financing, because that's what they spoke about. But I myself Natasha, I have problems getting people approved for conventional financing.
So the question is, and how many applications did you have? Because you've been on fire in the past 60 days. And how many pre-approvals were you able to get out?
We were able to issue about 20% of the applicants.
Gotcha. 20%. That means if 100 people apply, you got 20 pre-approvals out.
I got 20 pre-approvals
That
out.
is a lower number than what Navy Federal
did. I want to say, but we have a very strong pre-approval. Most of our clients go under contract in 2 weeks, right? So we want to make sure that they have the income, assets, funding, everything set up in order to close. Yes.
So I hope through this that Navy Federal is watching and they never give a pre-approval that they didn't pre-underwrite. And then they won't have to get this press because what they did is different from what you and I are doing. What you're saying is of your 100 buyers, you issue 20 pre-approvals. What the news is saying is that they deny people under contract, which is unacceptable, right? They need to make sure that they are pre-underwriting their files, hire some extra staff, and make sure that you can deliver. Because the worst thing you can tell a client 2 weeks into contract because you didn't fully underwrite that file.
Or 2 weeks before closing, not 2 weeks.
2 weeks before closing.
2 weeks before
that
closing.
You didn't do your due diligence, that they now cannot find a house. So if you don't get hit for being discriminatory, you definitely getting hit for not doing your due diligence, which is required if you're going to be a lender.
But one thing, why do our communities get denied for conventional financing so much to begin with? And I want to be clear. I want to be clear. When people apply with us and with anyone in our industry, we don't automatically go the FHA route. We don't automatically.
But many lenders do, ma'am. Many lenders will take them FHA and put them through that process for no reason because it was easier for them.
Because it was easier. Or it's because what they know. Or how about the lenders or the loan officers who only know conventional, and if you don't get a conventional pre-approval, they don't look at the other loan options for you.
How about the gossip that FHA loans are for the poor people
and
ghetto loans, and listing agents won't even accept an FHA approval when we're closing FHA and conventional in the same exact amount of time.
In the same amount of time.
It's stereotype.
But how about the worst of that is, well, let's get back to helping people getting pre-approved for conventional loans. If we give those parameters, how many of us are actually going to work towards getting that level of pre-approval? If I tell you, you need to go on a financial diet, sit down and talk to your family on how you have to cut back expenses. You have to save money. You have to work on your credit being at a 700 range, being able to show reserves because that's what's required.
That's the borrower standing on their business. But what about the loan officer that doesn't know they could have put them in home ready? That doesn't know that they could have put them in home possible and got them approved with a lower score? That doesn't know that they could have did 5% down on a 2-flat, got them IDA funds, and still got them through the process? What about the loan officer that didn't do their due diligence?
If you know of housing, of half a loans nationwide, if you're a loan officer, most of them have a loophole that they have conventional loans that will give you 5% down on 2 units. Most of them nationwide, right? I know we're able to do it in the state of Illinois. I know a couple of other states.
We can do it everywhere now with the new guidelines, 5% down, 2, 3, and 4 unit.
But that's also going back and forth with that. There are some particular guidelines that people have to meet. You can do 5% down on those, but they're requiring like 6 months reserves.
6 months reserves. And do you know what reserves is? For our listeners, they are mortgage payments. So if your mortgage payment is $2,000 on an FHA loan on a 3 to 4 unit, you will need 3 months reserves, which is $6,000. But on a conventional loan for a 2, 3, or 4 unit, you will need $12,000, 6 months reserves. So you got to be able to have those funds available. And a lot of the clients, let me tell you the biggie on our clients. They don't want to tell you how much money they have because they think that we're going to make you spend it. So they think that if they tell me about their secret account with $80,000 in it, that it's going to make them spend it. But if you disclose your assets, now we can put you into the conventional loan, which is going to be better off for you in the long run.
And it's showing you reserves. I think the loan that's best for you is the one that meets your budget and meets your payment and gets you to the property you're looking at now. So let's think of today, right? But another thing, going to backtrack about real estate agents not accepting FHA borrowers, right? How about when they're the ones representing the buyer, right? So when they're listing a property, they don't want to accept an
But
FHA.
when they submit the offer, they want you to
They
take the
want you
FHA.
to take an FHA.
You just need to work with a lender that can close FHA and conventional at the same. The difference between the FHA loan and a conventional loan for the seller is you have to own the property for 91 days to go under contract on FHA. And if you have chip paint, broken windows, or things like that, they will make you fix them.
Fix it.
But anything that is unsafe, uninhabitable, and a danger for the buyer for health reasons will not go through, whether it's conventional or FHA.
Well, some things will go through on conventional.
I'm talking about hazard. Which
hazardous.
would go through?
Like on conventional, you don't need utilities on.
Right, but that's not a hazard.
Not a hazard.
I'm talking about the mold, the mildew.
Yes, correct.
That stuff is not going to go through on conventional, and it's not going to go through on FHA.
But how about the buyer? How about the borrowers with a very minimal credit score questioning and being offended when they can't get approved for conventional loan? That's happened to me.
Yeah, I mean, everybody wants the best of the best, but we're going to let you know what you qualify for. And if you qualify for both, we'll give you both options so you can compare and see what's best. But as it relates to Navy Federal, we have to see if they were discriminating. And the way I think they'll find out is by testing those files and seeing if they were actually really pre-approved before they issued the pre-approval. Yeah. And the second is their non-African American buyers, did they get the same process? Were their files pre-underwritten and then turned around at the last minute, or did they treat everyone the same way and it was just a higher percentage of our borrowers that didn't make it to the underwriting process? Or were they being discriminated? So we have to watch the news on CNN and wherever else is going to be to see. Navy Federal is a big name bank. Everybody wants a bank account with Navy Federal. So I'm hopeful that it wasn't discriminatory. And if they just didn't do pre-approvals like most loan officers don't, then I just hope they come up with a better system to pre-underwrite files, get more loan officers like you in there that actually pre-underwrite.
And ask the right questions.
Ask the right questions. And you as a buyer, if you're going to go to a big name bank, XYZ is what Miss Nina Gonzalez prepped me to say, you need to make sure that your file was really pre-approved and get a second opinion. Go to your XYZ bank and then go to your regular loan officer bank that doesn't do checking and savings, that focuses on
solely on
go to us,
mortgages,
right?
Yeah,
and then let us compare between Navy Federal, and then that way during our review, if we find that, then we'll let you know, and that way you will know what questions to ask Navy Federal if you felt like they were the better option for you.
Yeah, I mean, so that was a lot of takeaways, but number one, be prepared, stop being offended, right? Really get your stuff together. I run into people who don't know anything about their own finances. Prep yourself before you sit down with the financial institution. That gives you the power, right? So we recap, make sure that your income, assets, and that you meet the qualification guidelines as you apply for these mortgage programs, and then get yourself mortgage ready.
And don't just go off what you want to hear. Just because one person told you no, and then this other person without verifying anything told you yes, do your due diligence. We don't know what's going to happen with Navy Federal, but I'm waiting to see. Like I said, they're a big bank, and I'm just hopeful that we just utilize this as the ability to stand on our business, make sure you're fully pre-approved, make sure you're ready to go. You learned today that you cannot use income from a business if you did not pay taxes on the business. If you have write-offs on your tax returns, those things can come up in your process. And if you cannot withdraw your funds in the case of an emergency, it is not an asset that you can use on your application to purchase a home. And that is what I have today.
Awesome. I like that. I like the way you broke that down. So thank you guys so much. Once again, as we bring you info to stand on your business.